What a volatile day in the markets. AMC almost immediately fell in the beginning of the day. We started to rally, hit $15.81 per share. Almost immediately after that, started to sell down, went under $15 per share, and then closed and are currently sitting at $15.31 per share. So it was an incredibly volatile day. We got a lot of news, some good, some bad, but most of the news was definitely on the bad side. AMC closing above 15 is a good thing. That is reaffirming yet again that support level at $15 per share is very strong. Now, there's a lot we have to get into, so I don't want to waste any of your time. Hit that like button and subscribe to the channel if you guys have not already. As well as that, get yourself free stocks. Links down below in the description for Webull, Moomoo, and Public. And also, if you want to come join the trading community, link down below in the pinned comment. Now, the news for the day and what caused a lot of this volatility is pretty straightforward, but it comes down to a couple key things. First and foremost, the big catalyst, which we have been talking about extensively here on this channel, was the CPI data that came out at 8:30 in the morning. And CPI rose 7.9% in February as food and energy costs pushed prices to highest in more than 40 years. Excluding food and energy, both of which moved sharply higher during the month, core inflation still rose 6.4%, in line with expectations, but the highest since August 1982. So that was a big concern of a lot of investors is, hey, we know there's going to be a lot of inflation from food cost as well as from energy cost, but excluding that, what is the CPI going to look like? And it's still very high at 6.4%. And over the next couple of months, we're going to see the rent prices going up because when you sign a lease, you lock in that price for a year or two typically. And a lot of those leases from the 2020 time period are starting to come due. And a lot of landlords are going to be raising prices. So that's a lagging indicator, and that has not actually reflected yet. So that's going to be another big thing that is reflected on the CPI data here in the next couple of readings. And I think the markets are finally starting to realize that inflation probably here to stay for a while, thus selling off a lot of stocks. We were down substantially at one point. The markets did rebound a lot actually by the end of the day, only closing down on the NASDAQ down 0.95% and the S&P down under 0.5%. So definitely a better reaction towards the end of the day than we've seen in the beginning of the day. But that does go to show us that volatility will be here and will be in the markets for probably a while. You also have this that just came out at 3:09 p.m. It says JP Morgan is winding down its Russia operations amid widening business exodus over Ukraine war. The key points: JP Morgan Chase, the largest U.S. bank by assets, is stepping away from Russia. Quote, in compliance with directives by governments around the world, we have been actively unwinding Russian businesses and have not been pursuing any new businesses in Russia, company spokeswoman Tasha Pelio said in an email. The bank's dealings related to Russia were limited to helping global clients address and close out pre-existing obligations, managing their Russian-related risk, acting as a custodian to our clients, and taking care of our employees, she said. So they did not clarify exactly how much exposure they have. We did get word as well that Goldman Sachs has about $960 million worth of exposure to Russia, which sounds like a big number, but it's not relative to the assets under management. But still, $960 million to evaporate overnight is not something to sneeze at. It's definitely a substantial amount of money by any means necessary. JP Morgan, we can only speculate and guess what their kind of limited exposure is, but we do know Citibank, which has a market cap of about $110 billion, has about $10 billion of exposure to Russia. The big problem is for a lot of European banks, they have a lot more exposure to Russia. So what happens in that scenario when a lot of those European banks start to take massive losses? Does that come back to the American economy? How much indirect exposure do U.S. banks have? Indirect exposure would be like JP Morgan investing in Deutsche Bank or Credit Suisse or another European bank that has a lot of direct exposure to Russia. How does that potentially a credit crisis play into our markets? How will investors feel about that? That is yet to be determined. Now, some other bad news that we did get today, which I think more or less the markets actually reacted to, is that essentially Zelensky, Ukraine's president, and Russia, they're not really having a meeting. The foreign advisor to Ukraine and Russia met today and basically said there's nothing we can do. There's no deal that's going to be met. Nothing is going to be solved by this, so they're not going to have any more further meetings from what I got out of that. And there was essentially no good news. There's still that civilian corridor ceasefire, but again, it doesn't seem like Russia is actually honoring that. So that was a big reason why the markets actually did fall today. And I think it goes to show, until the Fed acts and raises rates or surprises the markets, really Russia-Ukraine will be the topic of discussion, as well as commodity prices, because Russia has put bans on exports of certain commodities, but they haven't really announced all of the commodities that are on that list. I think they're trying to figure that out right now. And I do expect to see a lot of crazy commodity moves. And as commodities go up, the stock market tends to come down. That's really tends to be a correlation between the markets and commodities. So I think it's going to be very volatile for those reasons. As far as AMC, we did get news today that AMC is now accepting more cryptos to be used online. And that actually comes from Adam Aaron. So that did have somewhat of an effect on the price of the stock today, but that was about right here. We did, that was pretty much right after this where we did hit under 15, and then that news came out and we went right back up to $15.29 per share, but it didn't have a substantial impact on the price of AMC. Nonetheless, that is what happened today. That is what really caused the volatility in the markets, and I think that is here to stay for a while. I don't see a scenario where the markets just rally back up. I don't really see a scenario right now in the near term, in the next couple of weeks, where the markets completely crumble. You have to see the fundamentals start to decay, and from what we are seeing as far as earnings are concerned, Blink straight down 6% in after hours. Oracle down almost 6% in after hours. So you're definitely seeing a lot of fundamentals getting worn away from a lot of companies. But we have to see that develop on a bigger scale. Really, today, what saved the markets is Amazon. If you guys look at this, Amazon was up almost 7%, whereas Apple, the largest component of the markets, was down 3%. Microsoft down 1%. Tesla down 2.83%. Google down 0.69%. So I do think you will see that rotation away from a lot of these large cap stocks into some of the smaller cap stocks that control less of the markets, thus meaning the markets will probably come down once the fundamental picture starts to not look as good, once more companies continue to downgrade their earnings forecast. I think you'll see the big stocks sell off, and I think you'll see that money flow into a lot of the more beaten down, smaller and mid cap stocks. And AMC does fit in that boat and in that category, as they are a recovery stock, and they definitely have a lot more recovering to do. So a little bit of positive, lots of negatives there, but it's overall good for our cause. We need to see the markets coming down, and we need to see liquidity being restricted to actually ultimately see the MOS. Now, as far as AMC data specifically is concerned, we're looking at 20.74% short interest of free float. Current shares that are sold short of $106.86 million, or million shares. Cost to borrow max of 2.32%, and the utilization is 100%. So nothing has really changed here, which is very interesting. Days to cover at 2.62. So it's also still very hard for shorts to get out of their short positions, and this just goes to show the lack of activity in AMC stock is actually a good thing. You don't want to be in a crowded trade. AMC becoming less crowded is bullish by all interpretations. Now, the option activity, this is a big ouch. 3% positive order value, 17 orders totaling $3.93 million. So definitely not on the bullish side whatsoever. A lot of artificial shorting that happened today via the puts. We will be going over a potential gamma squeeze here in the video later on tonight for next week. You guys definitely want to pay attention to that one. As far as the max pain, that is $17 by the end of the week that is tomorrow, and you do see about 4,400 calls that are in the money. Out of the money calls at 137,000. For next week, that's the key week, 61,000 calls that are in the money, 333,000 calls that are out of the money, and a lot of puts that are in the money. Actually, 85,000 that are in the money. Out of the money puts at 59,000. So I definitely think there's a chance to see a gamma squeeze next week, but like I said, we will go over that more in depth in the video later on today. I want to keep this one a little short and sweet and straight to the point because I have been making a lot of longer videos, and I kind of just want to go over all of the data, hit you guys with it in a short amount of time, and hopefully you guys appreciate that for this video. As far as AMC is concerned, you have that huge demand zone under $15 per share. So once we break 15 every single time, we just bounce back up, and we have not closed under $15 in a very, very long time. So I think that goes to show that really that max pain, you know, the max amount of money you're going to lose here in the trade essentially is around $15 per share. So thus you've probably witnessed the max pain. Could we go under 15? Sure, if the markets completely crumble, but I don't really think that is going to be the case. As the days you do see the markets are down substantially, AMC still tends to remain above $15 per share. So that is a key level. Obviously, I will be watching that. We have to break out above 1650 and then ultimately 1850, and that's where the situation will start to look incredibly bullish. The 50-day moving average is at $18.89 per share, and the Bollinger Bands, the 20-day simple moving average, has us at $17.53 per share. That was holding a lot of support here in these days, but then we broke under that and broke substantially under that. So we need to get back above that. I think it's going to happen. It's only a matter of time, as we are even seeing lower volume on any given day in the really the 25 million share range we've seen in the last 2 days. Just goes to show as well, when you do see higher volume, the price of the stock is going to go absolutely buck wild. The MACD is pretty neutral. It's a little bit on the bearish side, but still overall pretty neutral, not giving you a clear direction there. And the RSI is at 39.18, which is on the slightly oversold side of the stock. So that's pretty much going to be all for this video. Hope you guys enjoyed it. Hit that like button and subscribe to the channel for more videos like this. If you want to support the channel, link down below to join the trading community. You get access to all my trades in real time and join a very active community over there. If you have questions on options, if you want to learn how to trade them, if you just don't know where to start, that is your service for you. Again, link down below in the pinned comment and free stocks in the description of this video. Thank you guys for watching, and I will see you in the next one.